After the earnings, we are now need some new fuel and news, and that's why I wish you a happy Sunday on Tesla Sundays. So here is the blueprint of today's Tesla Sundays episode. But before we diving in, two things, guys. First, smash the thing out of the like button. This is highly appreciated for all the work that going into each of the episodes that I'm posting every single day, guys. And on the other hand, check out the maybe most valuable membership here on this platform. Okay, no other YouTuber offering this. Press the join button below all my videos and you get all the information you need to consider to join our Discord chat or even one-on-one with me. So check it out. And this is now the blueprint of today's Tesla Sundays. We will talk about the Tesla stock. We will talk about the stock analysis. We will talk about the valuation. There is, lots of discussion of the valuation of Tesla, not even in the internet, but also with my friends and family. So once for all, I will show you that Tesla is not expensive at all. And last but not least, I will tell you more about car companies, because it seems it started that the car companies are having a real big trouble because they making now big losses. What a run for Tesla stock. I mean, the last week was pretty, standard with, just 5% plus. And this is, fantastic. Once a growth story evolves and starts to deliver step and milestone after milestone, then it's just unstoppable. And then you have short squeeze after short squeeze after short squeeze and so on. So after, a month, we are looking at 40.4% gain, and if you're looking into 3 months performance, then we are looking into 87.24%, and 6 months even, from the lowest point where we were at our health crisis until today, we gained 300%, guys. This is really fantastic for all your shareholders out there. I'm really happy because, if you are following this channel since its start, it was one of my first big predictions. Tesla stock, people called me crazy. People called me, go out of YouTube. People told me that Tesla will be never successful, and now it's the most valuable car company. But Tesla is not a car company. It's a technology company with many, many different kind of businesses inside the company, and we will talk about the valuation later on, which will be very, very interesting because this is like a big topic apparently, not only worldwide and in Reddit, on the internet, everywhere, but also in my comment section where you should leave your comment. And I also want to encourage everyone to know how valuation at Tesla should be perceived. So very, very interesting topic. But before we are reaching the valuation of Tesla, we will go into a chart stock analysis where we look a little bit, where the stock will trade over the next couple of weeks, which channels are there. So a little bit of a technical analysis. Let's go.
All right, diving directly into the Tesla stock chart. Let's zoom in into 2020. What a wild ride here. And as you can see, this is still the potential outcome what I saw that we are trading currently in this channel here. Okay, so as you can see here, we hit this wall here, the upper wall, twice here back in beginning of April, then the lower floor during the June months, and then we had the outbreak with the earnings and everything going on, and then hitting again the upper trend line here. And then I said a couple of days ago for the last Tesla Sundays episode that I believe it was just the day where we hit the upper wall, and then I said, okay, it could be that, you know, we hit this and then we go further down, which the stock indeed did. It broke through this resistance here that we have somewhere at around 1,500, and then we might go even lower here to this resistance. But definitely I think for the next couple of months it could be very potential that we start to trade further in this channel here, up to, you know, 2000 levels in September. As you can see here, this is the September months in this region. So with Battery Day and other events and positivity on the market, we could definitely trade into these levels towards the end of the year. Otherwise, you know, another opportunity is obviously also that the stock, you know, break now here through, you know, with the overall, maybe with the overall bad market, you know, we can go down here, and then we could maybe see again $1,000 Tesla stock. But I think the probability is very, very low, because, you know, Tesla is meanwhile such a known stock and everybody want to get in, but, you know, the people thinking that this stock is too expensive, right? They think like, I don't want to pay $1,430 for one Tesla stock. But you know, the thing that I always say, you always make up the stories in your own mind that it's too expensive, it's too cheap or whatsoever. And last but not least, you need to look into the business. If you like the business, if you like the team, if you like the product, if you like the market, if you see growth, then, you know, the best time to invest is right now. Except, you know, you have limitation in money and, you know, you want to have maybe something more potential or see more potential, then obviously it's totally understandable. But Tesla stock is something that you can always consider for the long term. This is just the beginning, guys. I still believe that, you know, the market cap of $250 billion is still the beginning for all of that business that they have in the work, and more to that a little bit in the next topic, so stay tuned.
Okay, here we go. The valuation of Tesla is about somewhere hovering between, you know, 220, $275 billion. Let's assume $250 billion, okay? Now people are saying, wow, it's more valuable than Volkswagen, it's more valuable than Toyota. But the point that everybody seems to miss, especially those people that are not, you know, familiar with the case, which are mostly those people that are not invested. This is something that, you know, you should always consider. People are always, you know, against something when they are not shareholders. This is very, very important. So remember, when you argue with someone out there, you know, remember, you know, this guy, you know, missing out a very nice financial situation, and therefore obviously he is a little bit mad. So stay positive. I'm always positive. I want to share with you now the valuation formula that I think, you know, can be pretty accurate and fair from a standpoint what Tesla is really doing on a daily basis. Okay, let's start with the car company. Tesla is partly a car company, all right? They are producing very digitalized, high-tech, fast cars, full stop. And therefore, you need to understand that part of Tesla will and always was being a car company, but a revolutionizing car company. And according to, you know, the cars that they are selling, obviously it seems small, but you need to always differentiate between the type of cars they are selling. They are the biggest e-car manufacturer in the whole world, and therefore, you know, I would say a valuation of $50 billion for this car company would be suitable. Now let's talk about full self-driving. There's no other company in the whole world that is technically so far with the software, with self-driving, plus has so much data that they are collecting on real world fleet. All right, so that's two very important things that you need to consider when thinking full self-driving business of Tesla. Now, how much is it worth, right? I mean, Uber is somewhere which they are attacking at some point with this business. Uber at this point of recording is worth $52 billion. And what about Lyft? Lyft is worth $8.95 billion, okay? But a very comparable company to the self-driving business is actually Waymo, that was bought for $100 billion, guys. And they have neither the fleet nor their real data even close what Tesla has. So a price tag of what somebody paid already for such a business is very fair to say. So we have the car company 50 billion, we have the self-driving business 100 billion, and now we're coming to the solar business. Tesla is very, very far in the consumer solar business, and I believe that this business, you know, considering its youth, I think it's okay to say it's 50 billion, okay? And now the last 50 billion for the energy business, which I think it's very undervalued for 50 billion. So I'm more a friend of, you know, 100 billion or 150 billion, because this will be in the end the bigger business, and also it's already profitable. So consider this, that it's in such a young stage so profitable already that, you know, Elon Musk even says it's, you know, it will be just a fully sustainable company at one point with different kind of businesses inside Tesla, which, you know, they have so many interesting products coming out there. And therefore I believe a valuation of 200, 250 is still very, very fair, guys. And, you know, consider this as a very fair priced company at this point. So if you want to load up, now it's a good point, because at, you know, end of 2022, maybe the fair value will be already, you know, 500 billion or maybe 750 billion. We don't know, but long term, this company will multiply your money, and that's with a, in my personal opinion, very, 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 very high conviction rate. So you remember when there was always a saying, the competition is coming, and Tesla will be, you know, really having a hard time. Well, we're still waiting for that, because no one came close yet with their electric vehicles. Now, think about now the biggest car companies. What really struck my eye is that Tesla actually make, you know, $104 million profit versus Volkswagen losing $900 million, and Daimler, even the inventor of the internal combustion engines, and making so much profit and not thinking, you know, to innovate, will maybe, you know, maybe, we don't know, right? Maybe they will die out, even like Nokia or BlackBerry, you know, they have to, you know, focus on other things. And I believe it will be so important to really innovate for these companies, because Daimler did in their last quarter $1.9 billion loss, guys. You know, when the people laughed about Tesla that they don't make money, now it's other way around, where Tesla makes a hell of money and the traditional car companies are driving losses. Now let's talk about a little bit about the future. So what needs to happen? When the smartphone came out, then the big telephone companies really, you know, changed in terms of they tried to copy it but didn't, you know, figured it out. So it's really hard for the traditional car companies, because it's so capital intensive, to copy Tesla. So they would need to have an own charger network. They would need to have really digitalized cars with software over the air updates. So very, very strong engineering as well. So I believe that if the leadership of the traditional car companies don't start right now, then there's no chance to catch up with Tesla. But the market is definitely strong enough and big enough to have multiple car companies around. But, you know, I think it will be much more smaller, because car driving in the future will be self-driving. And so not only they have to have a really nice fleet of electric cars, but they need to have self-driving cars as well. So I'm super excited to be, you know, alive during this very exciting times, and being always, you know, seeing it through the noise of the market. And if you want to join the membership, or join, you know, me just by subscription, or follow me on Instagram, because there I'm sharing these things as well. So stay tuned, and until next Sunday.